What I'm about to share will make you a better trader, but most trading gurus won't tell you this process. Why? Because it doesn't sell courses. It doesn't require mentorships like mine. It doesn't make them money. The steps I'm laying out are simple, they're cheap, and they work. But they require real work on your part. Not paying someone, not joining a community, just you, some books, and actual effort. Most gurus would rather sell you the dream of quick profits than show you the boring path that actually works. So here it is. The process almost nobody follows, but everyone should. I give you the process. Follow it or ignore it. Your choice. Full disclosure, I'm Henry Henrich's AI avatar. But this process I'm about to share, it beats AI. No algorithm can replace it. This process has 5 stages. Most traders quit after stage 1. Some make it to stage 3. Almost nobody completes all 5, but those who do become consistently profitable. I'm walking through each stage. Books, system building, rereading, refinement, live trading, all of it. Most traders fail because they skip the foundation. They jump straight into trading without building real knowledge. They watch a few YouTube videos, follow some Twitter accounts, and think they're ready. They're not. If you want to become a good trader, there's a process. It's simple. But most people won't do it because it requires actual work. Start with books. Read around 5 books, maybe 4, maybe 7, but somewhere in that range. Not random books, not whatever shows up first on Amazon. Read the books that experts in your style recommend. If you want to trade momentum stocks, read what momentum traders suggest. If you want to swing trade, read what swing traders read. For me, it was Minervini, William O'Neill, Nicholas Darvas, and Jesse Livermore. Those 4 shaped everything. They gave me the foundation I still use today. The point isn't to copy their exact methods. The point is to absorb the principles, how they thought about risk, how they approached entries and exits, what they looked for in winning trades, how they handled losses. After you finish those books, you'll have all the knowledge you need. Not all the experience, not all the skill, but the knowledge is there. Most traders stop here. They read the books and think they're done. Maybe read more books or start trading immediately. That's a mistake. I learned this the hard way. After reading my first trading book, I thought I had it figured out. I opened my account and started trading immediately. Within 2 months, I'd lost 30% of my capital. The setups from the book looked perfect in hindsight, but I had no system for managing them live. No exit rules, no position sizing logic, just entries and hope. That's when I realized reading isn't the same as building. Build your system. Now the hard work starts. You need to take what you learned and turn it into your own system. This means defining your setups. What patterns do you trade? What conditions need to be present? How do you filter out bad trades? Write it all down. This means setting your risk rules. How much do you risk per trade? Where do you place stops? How do you size positions? Be specific. This means creating your exit strategy. When do you take profits? When do you cut losses? Do you use trailing stops? Do you scale out? Define it. Then you need to backtest it. Go through historical charts and see if your system would have worked. Track every trade. Record the wins and losses. Calculate your win rate and your risk to reward ratio. This step takes time, weeks, maybe months. You're not just testing random ideas. You're building something that actually has edge. Adjust as you go. If something doesn't work, change it. If a filter improves results, add it. Keep iterating until you have a system that shows consistent positive results over hundreds of sample trades. Most traders rush this part. They backtest for a week and call it done. That's not enough. You need to see your system work across different market conditions, bull markets, bear markets, choppy markets, all of it. Reread the books. Once you've built your system, go back and read those same books again. This is where it gets interesting. You'll notice things you completely missed the first time. Concepts that didn't make sense before suddenly click. Warnings you ignored now seem obvious. The first time you read, you didn't have context. You were absorbing everything as theory. Now you have experience. You've built something. You've tested ideas. The books hit different. You'll find yourself nodding along to passages that seemed boring before. You'll underline sections you skipped. You'll realize the author was telling you exactly what you just learned the hard way. This isn't wasted time. This is when real learning happens. The books become reference material instead of instruction manuals. When I reread Minervini the second time, I almost laughed out loud. He'd written an entire chapter about position sizing that I'd completely glossed over the first time. I remembered thinking it was boring, but after blowing up trades because of oversized positions, that boring chapter became the most important one in the book. I'd highlighted maybe 3 sentences the first read. The second time? Practically the whole chapter. Work on your system again. Take the new insights from your second reading and apply them to your system. Maybe you realize you're overcomplicating entries. Maybe you see that your risk management needs tightening. Maybe you notice a pattern you missed before. Adjust your system. Test the changes. Backtest again. See if the modifications improve your results. This is another cycle of building, adjusting, and testing. But now you're working from a higher level of understanding. You're not guessing, you're refining. I spent 3 months backtesting my first system. I went through 200 trades on historical charts. The results showed a 40% win rate with a 2.5 to 1 reward to risk ratio. Profitable on paper. But when I tracked my emotions during the backtest, I noticed something. After 3 losses in a row, I wanted to skip trades. That told me everything. My system was mathematically sound, but psychologically difficult for me. So I adjusted it, made the win rate higher, lowered the reward to risk slightly. The edge got smaller, but I could actually execute it consistently. This was the hardest part for me. I watched other traders post winning trades all day on Twitter and Instagram, big percentage gains, screenshots of 5-figure days. Meanwhile, I was reading books and backtesting my system. It felt embarrassing. But those flashy posts, most of those accounts don't exist anymore. They blew up. I'm still here because I did the boring work nobody wants to film. Reread again. After this second round of building and testing, read the books one more time. You'll pick up even more. Things that seemed minor before now feel critical. You'll see connections between concepts that weren't obvious. The whole picture becomes clearer. At this point, you're not just reading. You're having a conversation with the material. You're comparing what the author says to what you've learned through your own work. Now the fun starts. You're about to put your system to work. You dropped maybe $200 on 5 books, $0 lost to bad trades. Just that and a ton of effort, and you're already in better shape than most people who call themselves traders. Start trading small. Only now should you start putting real money on the line, and when you do, start small. Trade with amounts that won't hurt you if you lose. The goal here isn't to make money yet. The goal is to test your system in live market conditions. Paper trading doesn't count. It doesn't trigger the emotional reactions that real money does. You need to feel what it's like to hold a losing position. You need to experience the temptation to move your stop. You need to know how you react when a winner starts pulling back. Small trades let you gather this data without blowing up. You're still in the learning phase. You're seeing if your system works when emotions are involved. Track everything. Every trade, every decision, every time you followed your rules, every time you didn't. Write it down. After a few months of small trading, review your results. Does your system still work? Are you following your rules? What needs adjustment? My first live trade with real money was a $50 position. Tiny. The setup was perfect according to my system, but my hands shook when I clicked the buy button. The trade moved against me by 2% and I almost closed it early even though my stop was at 5%. That small position taught me more about myself than 6 months of backtesting. Paper trading never made my hands shake. This process doesn't end after your first few months of live trading. Rereading those same books and adjusting your system needs to happen at least once a year. Markets change, you change, your understanding deepens with experience. Set a recurring calendar reminder. Every 12 months, go back to those core books. Reread them with fresh eyes shaped by another year of trading. Then review your trading data from the past year. What worked? What stopped working? Where did you break your rules? Adjust your system based on what you learned. Maybe your entry timing needs refinement. Maybe your position sizing needs tweaking for current volatility. Maybe you discovered a new filter that improves your edge. Test the changes, backtest them against recent market conditions. Make sure they actually improve results before implementing them live. Traders who skip this annual review get stuck. Their system stays static while markets evolve. Then they wonder why their edge disappeared. The best traders treat their system like living software. Regular updates, continuous improvement, always based on data and rereading the fundamentals. Why few people do this? This process takes time, maybe a year, maybe more. Most people aren't willing to wait that long. They want to start making money immediately. They see other traders posting wins and they feel left behind. So they skip steps, they read one book or none. They don't build a real system, they don't backtest properly. They jump straight to trading with big size, and they keep reading new books instead of rereading the good ones. They chase the next shiny idea instead of mastering the fundamentals they already learned. Then they lose. They blame the market. They blame bad luck. They don't realize they never gave themselves a real chance. The traders who make it are the ones who do the boring work. They read the same books multiple times. They build, they test, they adjust, they test again. They start small. They stay disciplined. It's not exciting, but it works, and that's what matters. Most people won't do the work I just outlined. But if you're still here, you're different. Subscribe and prove it. More real trading content drops every week.